October the 11th, 2022. As you're looking at the closing numbers today on the stock market, this is the NASDAQ, and that's tech heavy. Notice in the yellow line at the top, it says it's a new 52-week low. And I think some of this actually goes back to 2020, some of these lows that we're touching now. And what you're seeing on this is a 3-month chart. About a month and a half or so ago, I did a video on Paul Begley's show, and we talked about that one of the major financial analysts had taken a look at all the previous crises, including 1929 and other markets, our crash back in 2007, Lehman Brothers and all that. And there were things that were happening at those times, and they were all coming together for the last week in September and the first week or so in October. And one of those was the high holy days. Some was others were planetary alignments and groupings and other things like that. Full moon at a certain time and lunar eclipses. All of that is occurring now. And if you go back to the video, you'll get a better idea of what we were talking about. One of the things I want to point out, and this financial analyst, I think he was with Doug Hagman and Steve Quayle, said what was going to happen, and we're seeing it here, we would see a drop all the way into the end of October. Here's October 1st. We would see a slight rise to give the market some energy, and then we would see it start to fall again. That's what we're seeing right now. Now, on the positive side, there were comments made, and well, let me just say on the other side, there were comments made from the Bank of England that dropped a lot of things today on the U.S. stock market. Oil came down to a low that we haven't seen in a long time, the price of oil. Other things were hit. The price of gold was hit. But again, NASDAQ is a tech stock conglomerate, basically. So when you start seeing this, we're seeing problems all across the board. You're seeing problems with Metaverse, Facebook. All of those people are having troubles because they're having less customers, they're having less people sign up, things like that. Just you can see it happening. But now the Bank of England has come out today, this morning, and they were meeting in a meeting in Washington, D.C. The president of the Bank of England came out and said, everyone, you've got 3 days to sell everything. That would put it this coming Friday. Could we call it a Black Friday? We may see the beginning or be seeing the beginning of the slide now looking at this chart. Again, 3-month chart. We saw it drop, slight rise into October during the high holy days, and then the bottom start to drop out. We don't know the exact timing, but I want to go to the article that about what occurred in D.C. this morning. And what would be really nice is, I'm not a market expert. I watch certain trends and all, but getting deep into what certain things mean as far as how it's going to all come together, I'm not an expert on that. I do see some trends and I do see patterns. So if one of you guys or girls out here in the comments, after we look at this article about the Bank of England, I would love to hear what you think about it, and maybe it would help clarify it to me and to our watchers, the people that come in on the comments, because this hadn't happened before. This is new. He's saying sell everything, and they're talking about all of the risk things that they have, like they come in and buy up a bunch of risk stock from companies or risk bonds and things like that, usually they can resell them, but now all of that's kind of coming to an end. Again, let's go to the article and look at it, and let's get a market expert in here in the comments, or anyone that knows a little more than I do. You don't have to be an expert to do that, but this is important. I think we need to pay very close attention for the next 3 days. Before we go there, the video last night I said that Russia would strike again, and they did. They came in and just absolutely devastated other areas. They poked the bear too hard. and that retaliation is beginning. Again, we are in World War III because they're going to drag every nation into it simply because all the nations have already committed. How? By sending troops, munitions, and money into the battle against Russia. Russia said that they would consider that an act of war. Now we have this. Let's take a look at it. And I'm going to link to this article on Zero Hedge. And guys, please, nobody come in and say Tyler Durden is an actor in a movie or a character in a movie. I realize that. But what we have here on Zero Hedge is those are just names, but the information usually comes from different people. And that's what we're seeing here. And they put it all together, and most of it's almost 100% reliable on this particular zerohedge.com website. It says Bank of England to global markets. Today in D.C., you have 3 days to sell all things. That's Friday. An interesting day that started with the Bank of England expanding its pension fund bailout. In other words, the pension funds have been spent. So the Bank of England's going to come in and buy those up. Except there are not many buyers right now. They're buying it, hoping to resell it, but everyone's kind of scared because of some of these remarks that they're making. It said it started with the BOE expanding its pension fund bailout, the International Money Fund slashing growth outlooks globally. They said it was going to get rough. We already knew that. They weren't fooling us. They were just lying. Said, and significant hawkishness from Mester refuting Bernard's comments yesterday. Things were all holding together in an orderly fashion, however. This is in the meeting. Until the Bank of England's Governor Andrew Bailey started speaking in Washington late in the day, and they're saying went full Leroy Jenkins. After doubling down on his pension fund bailout scheme, BOE's Bailey spoke in D.C. this afternoon, initially warning that market volatility went beyond bank stress test. There you go, guys. Just as we talked about that was going to happen in September and October, here we are. Or is your money going to be part of the bail-in? Which, you know, since 2007, there's no bailouts. Now they just take your money. It's a bail-in automatic. It's in the contract in your checking or savings account. It says this is scary, then reinforcing that there's a serious risk to UK financial system stability, noting that the buying program is only temporary. Now, when you talk about the Bank of England, where do you think all the banks have come from? My message to the funds involved and all the firms is you've got 3 days left now, Bailey said at the event. You've got to get this done. The essence of financial stability is that it, or in quotation, intervention is temporary. It's not prolonged. So they've stepped in here saying they can't do anything. They will be basically helpless in 3 days to stabilize anything. Now, the question is here is, what does the Bank of England governor expect global markets to do now? All of these bankers are in on the Great Reset. You know that. Knowing that this is a serious risk to financial system stability and more stressful than bank stress tests, what would you do with your investments? You better turn them into something that you can hold. Food, other necessities, things you're going to need to make it. That's what you need to invest in. If you buy more than you can use, then you have a very good bartering system set up. Again, the tweet says it all. Roughly translated, you have 3 days to sell everything. The Bank of England doubled down on the boos they're saying at the pension fund bailout party this morning, adding inflation-linked debt to its purchases to stabilize the market after a record surge in yields on Monday. But no one turned up as gilts and linkers both saw yields higher despite billions in buying promised. They didn't do it. The Bank of England has been, it looks like it's being taken down. And the Financial Times are answering why UK investors aren't selling more bonds. Traders say the reluctance of some investors to offload larger quantities of gilts is in a part a consequence of the Bank of England's approach to making purchases. The central bank has only bought gilts at close to the prevailing market level and has rejected offers it deemed too expensive. Investors may get a slightly better price by selling their bonds to the central bank rather than on the open market, but the difference is measured in small fractions of a percentage point. In return, they have to face the uncertainty of whether the Bank of England will actually accept their offer to sell, or potentially leave the bank holding unwanted gilts in a market where the price may have moved against them in the meantime. That's what's happening. They came in and bought it up, everything that was collapsing in their market, and no one's buying it. They were going to buy it, sell it, make some money. No one's going for it. The Bank of England's approach is in contrast to its quantitative easing programs that followed the global financial crisis, the Brexit vote, and the outbreak. Everyone told them. Everyone told Powell. Powell finally got it about the quantitative easing, but now he's destroying the economy by raising rates very quickly. It's called the reset. Then the central bank waded into markets to buy a predetermined amount of bonds, whatever the price, with the express intention of lowering yields. This time the Bank of England said repeatedly it has no intention of seeking lower bond yields, a message investors have taken to heart. You sell the bond wherever the market is. There's no buying force coming from the Bank of England, the trader said. They go on to say the way that the bank has structured this intervention is they can only buy assets if people put offers into them, but nobody is putting offers in, said Craig Inches, head of rates and cash at Royal London Asset Management. He said the pension funds would rather sell their riskier assets, including corporate bonds or property, and so after Bailey's late-day comments, the selling begins. It says cable puked to 10-day lows back to 1.10. It says UK bonds were closed, obviously, and was that on purpose? He spoke here. Our markets were open, other world markets, but the bond market in the UK was closed at that time. And here's what happened. It says NASDAQ and the S&P are down for the 5th straight day, with NASDAQ at its lowest level since July 2020. Over 2 years. All sectors were hit on Bailey's comments, with tech the worst performer, staples and real estate leading on the day. And guys, again, I'm going to link to this, and you can read these charts. It says from Bloomberg, U.S. Treasury yields were lower on the day and mixed from Friday's close, with the curve steeper as the short end outperformed, reversing yesterday's increase shortly after Europe closed today. Guys, they know what's happening with the bear. Also, yields spiked higher after Bailey's comments. Bloomberg, oil prices extended losses after Bailey's comments. And you can see right here, guys, where the drop occurred. Right there. And it got hit hard. Gold puked hard after testing upwards towards 1,700 intraday. Here's that drop. So, are we starting to get hints of a true Black Friday? And where everything starts to collapse? Guys, you've got to really think hard about this. Keep an eye on the markets. I don't trust the news on CNBC, but they do have the market numbers. And if you have retirement, 401ks, things like that, you better pay very close attention and do what you can, even if you have to take a cut, guys, because something is better than nothing. But we're watching this. By the way, let me show you a satellite image. Now, what you're looking at with these satellite images over the Gulf of Mexico is Tropical Storm Carl. It was predicted to go into the Pacific Ocean, basically. But it turned north, and now it's coming out of the Bay of Campeche into the southern Gulf of Mexico. It's at 40 miles an hour again, and it's predicted to move north a little further and then make a hard left into Mexico itself. Now, there was a lot of flooding, I think it was in Venezuela and in some of those areas as it came across the tip of South America. People lost their lives. A lot of rain. Places got a year's worth of rain in just one day. Landslides, very destructive. So watch this system, guys. Again, the models are showing that it will turn left and go directly into Mexico. So what is going to happen, you're going to see the same flooding because there's a lot of moisture involved in the system. Now, you can see that here, red, black areas with the tops of the clouds coming out into the white dots. That's your highest storms, highest cloud points, and there's kind of where you can see where the energy of the storm is right now. One thing I want to point out, at the surface, things are moving kind of to the west. Notice that, and across the Gulf. But here in the higher levels, everything's moving north and east. It's kind of ripping back some of that storm. If the high pressure stays where it's at over the storm, it will turn it into Mexico. We're just watching it. I wanted to point that out. Things like this do certain, even though oil dropped today in price, if you have to evacuate or shut down oil rigs, it always seems to go back up somewhat. But I think the two big problems that we have right now is the fact that we may be about to see a major escalation in the conflict between Russia and NATO. The other is the banking system. We already knew, we've been talking about this, for it to start happening at this period of time. 3 days left on that. But guys, we're watching this. You watch it. It's a heads up. I will keep you updated on what this storm does. But then you've got a couple days. Tomorrow's Wednesday, Thursday, then Friday. I'm calling it Black Friday early because if they say that, and then Friday comes and they can't do anything else, they're saying, what is going to happen? You saw U.S. markets affected today. NASDAQ at a over 2-year low on the tech stocks. It's a heads up, guys. Be safe.